Good day. Ira Epstein of Linn & Associates with your metal market wrap-up for Wednesday, halfway through September the 15th, 2021, just getting on to 6 p.m. Central Time. So as we take a look, the stock market reopened a bit higher today. It had an up day, but remember, we had quite a few down days in a row here. So getting a bounce, okay. I was just literally 10 minutes ago on Sky News in Australia and talking about that. And I said, you know, you've been down a lot. To get a bounce, it's normal. Plus, you have triple witching coming up in 2 days. So traders evening themselves out. But I don't think the market's done anything. On the other hand, I was asked, what do I think? And into the end of the year, I'm still looking for higher highs. In the gold market, a disappointment. What can I tell you? It continues to be that. Market got up recently to 1810, got too high, fell back down into the low 1790s, and here we sit. Silver market trying to get a hold here just under the $24 area. And the market that I still like is the copper. Why? You can't bring back these world economies without copper. It's called Dr. Copper for a reason. As you get improvement in all that, the copper market generally comes alive. Dollar today down a little as it's still dealing with that tame CPI number from yesterday. So if we take a look at a weekly chart of gold, you keep seeing that this number on the rallies is where the market's failing against. We pay attention to that. We say the bias of the market is down because it's under the 18-week average of closes. When we look at the daily chart, I'll keep pointing this out to you. Failures, 4 of them actually, right in the same zone. Then the market stepped back. Okay, eventually it'll punch through there. I really believe that. The question is when and from what chart pattern. Is this the chart pattern? Well, I don't see this as it. You have a lower low, higher high scenario. That's not a trend. Yesterday, when we got up here to the 18-day average, I said if it can follow through, that resistance will be the 100-day average in green, and the gray line, that's the 200. It couldn't even do that. It's just sort of stuck right now at this 18-day average of closes. And as that's going on, take a look at the black lines. They're doing this. They're wrapping their arms around the market. And what that does is it compresses prices. That's good. Because as prices compress, it's like a spring. They're either going to break out to the upside or downside. The longer they compress, the bigger the ultimate move. Which way? Market's not giving us an idea yet. What the market does have is no trend, getting itself down into a zone where it's oversold. Any reading in the slow stochastic, the K or the D, the red or the blue, under 30, I consider oversold. So oversold, bias down, no trend, resistance at the 18-day average, potential support, the lower Bollinger Band, 1780-180, and next tier of resistance, 1819, that 100-day average of closes. When we look at the gold-silver ratio, it just ran back to that 18-day average of closes, and it died. That's typical. That's not atypical. When it finally gets trending, it'll stay over it, and if it's for the upside, you'll see it hits that number and bounces away. If silver were to gain on the gold, it'll hit that, fall back, because the lower the numbers go, the fewer ounces of silver you'd have to trade in a perfect world to get 1 ounce of gold. In the silver market, you can see you're sort of stuck here. You've got a higher high, a lower low, fighting right here at the 18-day average. Momentum sort of just drifting around, not oversold, but drifting. There's no edge in this market right here. I wish I could tell you there was. In the copper market, the trend is up. With today's action, you took the market back, and what you had before this was a lower low, higher high. Then you fell back yesterday, held that line in the sand, that 18-day average, and had a big rally today. Where did you think you were going to stop? Well, one of the numbers I would pick would be the 100-day average, and if it exceeded that, up to the upper Bollinger Band in the 445 level. If it falls back, I'll look for support there. The trend is up, and now we're starting to get the 18-day average climbing away. So it wouldn't surprise me on a hard break that you see the buyers step in against that 430.50 level. They wouldn't want to see the market under 428.70. I think that'd be their blowout number. The problem is if you go much higher, you get overbought. But if you drop back, you can still keep from getting into the overbought area. Platinum and palladium. I was laughing today as I was reading, I think it was Dow Jones Newswires, it was one of them. And they said, these markets are down, platinum and palladium, because of the chip shortage. Have they not been watching my show here that I give to each day? I've been saying that. You can't possibly say that you're going to have demand for catalytic converters when you're not making those cars. Now, you are making cars, but remember, we shut down, 8 plants? Was it at Ford or GM recently? Another group from Stellantis? It's going all over. So no, this market has still got very subdued demand. You need some of the product, but not what you normally need. Same in the palladium. You had 4 days in a row down, so today you got back over the lower Bollinger Band. Big deal. You're embedded. The pros, I think, are going to sell this market on good rallies here, looking for the market to come back down. That's my expectation. Get the red line to close over 20, I'll change my opinion. Not until that occurs. And in the dollar index, it's a lot of nothing. Higher high, lower low, stuck day in, day out at that 18-day average of closes, just simply not going anywhere. Now, I noticed, as the September has kicked off, a lot of people are, again, starting to subscribe to my services. That's very typical. People take off in the summer, then they come back and they go, oh, I don't want to miss that, because the opportunities start showing up, and that's what you do. So, I have 2 videos, and a lot of people take them both, and we offer a combo price on it. Because you get the SPY, the DIA, the IWM, they're all looking at the futures markets, the S&P, the Russell, the NASDAQ, the Dow. Well, it's good to start off with the futures, and I record that video at 5:40 in the morning typically. I'm going to give you a technical analysis, the trades that are coming out today, along with the day's news that'll be coming out. Then at 9 o'clock in the morning, approximately 3 hours later, I start recording my Spider ETF categories. And why? I want the morning reports to now be out of the way. So in the first report in the futures, we're looking to see what the reactions are, what could happen. Now I know most of the reports. I can tell you where that's at. And remember, these markets, at the end of the day, if you're trading the Spiders or the ETFs on stock indices, what do you think they're paying attention to? That's what they're buying and selling in order to determine their price. You put it together, you get a game. It works that way in currencies, interest rates, and you do know I cover a bunch of stocks. Right now, I'm enamored with Amazon, obviously, going into the end of the year. I like Apple right here to be a watcher of, to see what's going on as the new phone's coming out. I can't wait to take my own phone in and see what they'll give me for that, because I want to get that new 13 like so many people, but we'll see what goes on. You're going to get 24 videos of futures, 24 videos a month of ETFs. 4 of those, on each of them, will be weekly charts. So we give you the longer term analysis. You're away from the day-to-day, and I keep you up on that. Even though I'll do daily charts on the Monday through Friday ones, I will bring in the weeklies when I see that there's something that we have to look at. Getting started, easy as can be, inexpensive. Go to our website, under the word research, choose the package you might want. I'm Ira Epstein. Have a great day.